We have Miss Yvonne Cobb on Discover Your Best Self podcast, and she is part of our Generational Wealth series. Her business is Takeaway Tax, and she's going to be sharing all of our money tips so that you can keep your money in your pocket. All right. Thank you so much, everyone, for tuning in to Discover Your Best Self podcast. You know, this is another series. This is actually number 3 in our series of generational wealth that we'll be talking about. And we have Miss Yvonne Cobb, and she's going to be sharing with you all, you know, why doing your taxes is so important and vital to either your business or creating that wealth and doing things the right way.
Yeah, absolutely.
Yes. So, Miss Yvonne, can you please introduce yourself and then tell us why did you decide to be on this podcast today?
Okay, wonderful. Well, my name is Yvonne Cobb. I am an accountant CPA, born and originated here in Houston.
Okay.
I've been actually an accountant for over 20 years. I don't want to tell my age, but I guess that maybe go with the punches. I decided to do the podcast for multiple reasons. One is because I see what you're doing out here, and it's very educational, and you're trying to keep people abreast to where they should have their interest lies. But addition to that, I feel like Discover Yourself is it's a self space. You know, people have to take the initiative to understand how to build and how to grow and how to understand how, you know, getting to that next space, what it takes and, you know, what their accountability will be for that. So I think you are building a huge platform, and I couldn't wait to be a part of that. And I remember you when you first came from Detroit. So it was like, I got to keep in touch with Shanice, but you've been doing some great things. So I'm very well happy to be a part of this today.
Yes, thank you so much for coming. I wanted you here because I knew you were going to add value.
Yes.
And so tell us, you know, you said you're from Houston and your background, but why did you decide to get into accounting?
I'll tell you what, I came from a mother who was in corporate America all of her days, and she just kind of started me off as soon as I got out of school. She was like, you got to figure out what it is you want to do, because I was a single parent real early.
Okay.
So I had to go straight to school. As soon as I got through with graduating from high school, I went to Ebony Worthen, and accounting wasn't my first love.
Okay.
It wasn't. I kind of dibbled around sales, recruiting, but it all came back to numbers for me. I did everything from file clerk all the way up to doing accounting for oil and gas in those particular fields. So, of course, I'm in Houston. I gravitate to what's, you know, an anomaly. But moving forward, I decided to finish my degree in accounting and science. From there, I did consider retaining my master's, did 2 years, got a little hard, but I was able to finish that out at UHD.
Okay.
And from there, I just went right into corporate America, like most of us do. I've done aviation, I've done oil and gas, I've done private and public practices. And since 2013, was the last time I actually went into a person's office and worked for them. Of course, oil and gas kind of went their trickle like it normally does. It's a cycle. And at that time, I was just trying to figure out, hey, what's in it for you? You know, I've always complained in my corporate job that this could not be what I was told to do the whole time I was going to be here. Yeah. So I was always trying to figure it out. I began to do taxes, though, independently, maybe 2 years before I graduated with my bachelor's. I just got tired of giving my money away. That's what I felt like I was doing. Going to like the mom and pop preparers, not really knowing what they were doing, just trusting that they were doing what they were supposed to do. I started doing my own on TurboTax. I became that do-it-yourself guy like everyone else. But just me wanting to educate myself with that, I started doing friends and family, and it just kind of grew from there.
Okay.
So I've been doing just taxes independently for 10 plus years.
Okay.
But what I decided to do in developing that company, I ran across a lot of small business guys that just really needed to understand how to separate their money from their day-to-day.
Right.
So helping them structure their businesses made me develop a whole new company that would be separated from taxes. So, you know, we have you have to be very intentional when you're figuring out what you want to do as an independent, and then making sure that you plan and get your structures. Like I
And
said,
when you say independent, explain that for people who may not know what that means.
well, a lot of people have what I like to call hobbies or hustles.
Right.
So they're doing little things on the side where they're attracting money and they're building,
Sure.
but they don't necessarily know what to do with that.
Okay.
And then a lot of times when you're working as an independent contractor or you're doing something on the side, there is a trail. So I know that there's ways for people to make cash and it not come back, but over a certain amount, it is recorded. So even though you may feel like IRS doesn't know you're making the money, there's a very high risk chance that someone is letting them know what they're paying you. So whether you get bit now or maybe 4 or 5 years down the line, it eventually comes back. And it's all because you just were not prepared at that time. So I try to do a lot of education.
So a lot of the people. So you went first. Let me back up.
Okay.
You went out on your own and started doing your own business.
Yes.
Since 2013.
13.
Okay, great. And when you did that, you started working with other business owners.
Yes.
And then doing individual taxes.
Yes.
Okay.
Yes.
So what was the trend that you were seeing with either minority people or just even your own clients that may be making decent money? What $100,000, $75,000,
Very soft spot.
Yeah, nice amount of money. But what are you seeing the mistakes that they're making with their money?
The lack of separation.
Okay.
And just the lack of knowing where they can put their money and what not to put their money.
Okay.
And just not recording correctly. Okay. Like I said, if you are what I call middle America, you're making $100,000 to $200,000 a year. Most of them are young. I ran across a lot of engineers. I ran a lot of young kids that were coming out of school with education, and so they were given a platform where they're making the money, but they're not tracking what they're spending the money on.
Okay.
So a lot of times they're pulling cash, but when you pull cash, you've got to keep over with receipts. So I would get people that would come to me with stockpiles of receipts and understand that we're talking ink and paper. So after you rub on it 2 or 3 times, then it kind of dissipates, and now your accountant's trying to figure out at the end of the season or end of the year, where did this go to? What was it for?
So what do you suggest they do?
There's plenty of software sites that are free now that you can use to manage your money. It's kind of like QuickBooks on steroids. Even if you're not a small business owner, you can use things like Mint.com or you can use an Excel spreadsheet. Just get down to the nit. Pull your bank statements, look at your transactions, and just keep them recorded. If you know that you're spending money in a certain space and you're keeping receipts, take a picture of the receipt.
Right.
And then put it in. That way we use our cameras and our phones, and we walk around with computers all day with our phones. Take the pictures at the end of the month, record them in a spreadsheet space, and then you can get rid of them.
Right.
You don't have to keep them forever, but you definitely want to keep them downloaded, maybe on a zip drive or some type of removable disk that you can always come back to it.
Okay.
Because IRS has up to 2 years to come back and ask you about audit.
Right.
So that's another important thing, is to make sure that you keep your records for a certain amount of time. And then after that time is up, they can't come back and ask you, and there's no need for you to keep up with it.
Now, what about the people that may not be making that kind of money? Maybe they're around,
like 60, between 40 50. And say 70,000.
There we go.
Okay, so for those guys, it's the run of the mills. When you think about it, there's 4 quadrants on how America sees us in regards to if we're going to work every day, against being self-employed, against being big business, against being investors. So technically, if you're making $60,000 to $70,000, you're probably spending about 40% of that money in taxes. So there's a threshold, and they're keeping up with that money for you. But here's the thing: if you're still making $60,000 and you don't have any children or you don't have any dependents, now it's that space where they're taking that 20 to 30% from you, and you're not seeing any of it back at the end of the year. So you may even end up owing.
So what do you suggest people who don't have dependents or write-offs? What can they do?
Yeah, I suggest that you either figure out a business space, because now with the changes that was made in 2018, all the new tax law changes, things kind of went away. Things that we would normally use to write off in an independent space is no longer available for us to do anymore. So now we have to be intentional with the things that we do. You still have your IRAs, you still have your other retirement spaces. I would definitely suggest that they invest. Investments are really huge. Right now, there's things that you can invest in.
So when you say that, are you able to invest and then not have that being taxed? Like when you're
there are certain pre-tax spaces that you can invest in without what is called is paying taxes later.
There you go.
It just means you carry that burden of not having to pay it now, and you put the money into a space to where when you reach 65 to 70 and the government makes you take it.
Got it.
But now you're being taxed at a lower space because of your age.
See, we want you guys to understand that there are other ways, to move your money where it helps you and it doesn't hurt you.
Yeah, absolutely.
Yes, and
absolutely. There's a ton of education that's out there, books that have been written. I fondly go through going to the 99-cent stores as well as going to the bookstores and just trying to get read upon about just different avenues that you can take. There are even shortcut books to let you know what taxes are available. And then hold your tax preparer responsible. Like a lot of times, even with your CPAs and your accountants, they're doing the bare minimum, guys, with helping you forecast. But a lot of the times, the biggest issue is the individual.
Right.
They don't come looking for their accountant or their tax person until the end of the year.
Yeah.
When it's like, save me, I've made these decisions during the year and I just don't want to have to pay that much in taxes. When I go back to being intentional, you have to get ahead of it.
Right.
And right now, you definitely have to get ahead of it, which means things that have been taken away from us, we've got to funnel different things to figure out where to facilitate our monies, where to put, like tax plan, which is something that I really educate about now, because before you kind of knew the exemptions and things that you had off the muscle that you could take off of your tax liabilities. But right now, IRS is making it where you can't even itemize as much because they've increased the threshold.
Okay.
For you to take taxes off the top. So before, just a year ago, you were able to take off immediately how many people you had in your home. Each individual person was worth a certain amount, as well as your filing status.
Okay.
So now that exemption is gone. So you just have your filing status.
Okay.
So with the filing statuses, this year it was single, 12,000. It was head of household, 18. It was 24,000 for married joint. So those thresholds were where you would have to start to maximize doing any more itemization. Most of us as individuals, if we're making that amount, we may not own our home.
Right.
So there's a certain cap on how much house interest you can write off now. But most of us that don't own a home can't use our home, our taxes, so on and so forth on that. And then if you don't have any large medical expenses, say if you're $60,000 making, you have to meet 7.5% of medical expenses to be able to write off any larger medical expense. Like maybe if you had a surgery that you had to pay it off in full that year, that would probably be the only thing that would help you get anywhere close. But here's the margin. If you're single, you've got to beat $12,000 off the top. If you don't, you're stuck keeping just the $12,000 max. So when you start at 60, that means they're only taking $12,000 off that 60.
And there's a lot of single people that aren't.
Yeah, and you're paying 48. You're paying your tax rate at 48,000.
Right.
So a lot of times, it's going back as people are still working. It's really going back and looking at your W-4, and as of 2019, that's changing. Yeah. That's another conversation that they have not told us, but they wait to roll it out when your HR
they're having the new one, right? Yes.
Yeah.
Okay.
So HR will begin to start rolling out towards the end of the year these new W-4s, and they're setting you up, guys. And that's it's basically what they're doing. They're giving you the green light on how much to have taken out of your your checks.
So how does that correlate with you know, having your credit right, getting your taxes together, and, you know, possibly being able to purchase real estate.
So real estate. If and then I'm talking to the right lady.
But I mean, like, but how do all three of those
combined?
Yeah,
Okay,
how
because
those
that's
correlate?
that goes into like your net worth.
Yeah.
You know, when you start to talk about your credit, people are trying to get that together because they're still trying to get credit educated.
Right.
Because unfortunately, that's the way the banks work. The way the banks make money, the way the banks, circumvent themselves is off of the credit of each individual person, regardless if you're in the business or not. It's very important to look at the credit as a leverage tool. You know, this is just for you to leverage what you've got going on to increase your network, but really not for you to use. Only when necessary. They really, your credit profile really, and I'm not the credit expert, so please don't announce me as that, but I've seen enough to understand because unfortunately with working with small business, those three combined is the offset of how a company grows.
Okay.
Because a company still needs to know that their leaders have the credit worthiness to do certain things for working capital, for asset purchasing. When it goes back to your real estate, opportunities, real estate could just be rental houses or land that you own or just your home itself.
Okay.
Those things tie into your net worth and your credit worthiness. If you own something, now you have assets. You have something that a bank will allow you to use as leverage to meet something else. So it serves several purposes. The tax part of it is wonderful because if you have real estate, if you have ambition to utilize your credit, you have other spaces that are non-taxable with your credit and spaces that are non-taxable with your real estate. So I would definitely...
That's just leveraging all your opportunities once you get all those things in line.
Yes.
And so, you know, what, like you're saying, you know, when you have your credit, you can go ahead and make sure then you get your real estate.
Yes.
The real estate helps you being able to write off some of those things in taxes.
Absolutely.
For you to keep your money in your pocket.
Exactly.
So it's steps to all of this, guys.
Yeah, absolutely, absolutely. And you know, real estate is one of the largest ways for people to write certain things off. But there's still smaller things. There's, like I said, investments, life insurance. You know, people seem to forget about that one. There's other smaller funnels. There's investment groups. Don't think a portfolio is too small for you to start talking to Merrill Lynch and some of the other guys, because you've got to understand, guys, these guys have to build up to those larger portfolios. So as you grow your coins, then you'll be able to move into other spaces. So don't leave those things out. I mean, there's people who are brokers for the Bitcoin groups. Always when you get that Amazon hit, when people thought not to invest, and then here comes 7 years later, Prime and all the rest of these things, and you're like, I missed out on that wave. So another set of business that's getting ready to come out, and I know a lot of people maybe think I'm impolitically correct by bringing this up, but cannabis, guys. I mean, that's about to be the new age alcohol and tobacco. So once in the next couple of years, while people are getting on the CBD train and they're doing certain things, it's where will you be at that space? And it's just figuring out what markets are moving and where, and it's nothing that, unfortunately comes without work. You've got to really start to do the homework and figure out what it is you want to do. And then you've got to start looking at recession-proof businesses, businesses that are self-sufficient. I've talked to multiple guys in small businesses, and they're always looking for things to invest their money into, especially other businesses like wash interiors, car washes, things that you don't have to sit and man. Doesn't have a lot of manpower, but it makes money because it satisfies the need that a group of people need. Also, when I say recession proof, we talk about taxes, but it's best to educate yourself about your own path. But taxes is a huge industry that grows phenomenally. There is regulation like it is in any industry, but there's people that make tons of money doing taxes, understanding finance, and recognizing that there's other funnels that they can
Right.
utilize in this growing avenue. And
Yeah.
I speak on that because I learned that, in giving these education spaces and talking to people about it, more people want to know. People are hungry
Yeah.
right
They want the
now, and they're
knowledge.
trying to figure out
Yeah.
what's next, how they can, build generational wealth.
Yeah.
Where does that really come from? Who started to have the conversation? There's huge summits that are going on. Look at what's going on locally. Go to the different summits where the guys are. It's almost like you've got to eat in the same room where these guys are, because they're dropping knowledge and nuggets. But unfortunately, you either find it out in snippets that other people that decided to get on the train and figure it out.
Oh, yeah.
So understand, educate, and implement some of those things in your day-to-day.
Yeah.
Record keep everything that you do. Unfortunately, if you're going to create a business leg or a hobby, separate your money.
Yeah.
Separate what that is. If you're going to invest, you can create a DBA. It's $15, guys.
Yeah.
Go to your county office, create it. Use it as a blanket. As long as you have record keeping, where if IRS was to come back, all an audit means is prove it.
Yeah.
If you say you did it in this fashion, just prove it.
And because you're so passionate about the education and wanting people to understand, how to improve their financial situations, to maximize the most out of their pay and their income, what are your goals, moving forward?
Okay. Well, speaking on generational wealth, I myself, if I tell you that I've been trying to figure out the next step with understanding how to create wealth within my financial funnel, it always goes back to creating opportunity for people, individuals. It's best that you figure out how to either do some, like I said, some in particular business that you can come up with, and make sure that your businesses match each other. I like when people have multiple businesses that they're interested in, but I would always like to say make sure that they overlap a little bit, so that you could be the best in an industry, but maybe you're taking on different phases of the industry. But they're all separate businesses. They're all separate funnels of money and streamlines. Personally, myself, we're trying to produce these classes that allow individuals like yourself to how to become tax preparers. There's a lot of people who have done taxes in the past that have kind of gotten away from it because of regulation. You need to learn how to become the advisor for your clients. It's like in any consulting space. Doing the taxes is one thing, preparing is one space, but there's also tax planning. There's also tax advice, because during the year, like me and you, we make decisions to do certain things.
Right.
So how would it be if you could contact your preparer or contact your accountant to ask them during the year, what can I do? Can I do this?
Right.
What will it affect me? So we want to help educate so that people can figure that out, as well as coming up with a podcast that I'm getting ready to do. It's called The Lie. The Lie, guys, I know. And it stands for Learning, Implementation, and Empowerment.
Perfect.
So you are learning how to escape the regular norm and educating yourself with how to move forward with what you're trying to do. And then with that, it's called implementation, and that is a huge space that happens in small business. It's not the point that the business owners don't educate themselves. It's the actual doing, the work. The actual layering, the planning, and the execution that falls in between the cracks. So you really have to be responsible for your implementation.
Right.
And then these things will empower what it is you're trying to do or elevate you.
And I like that
into
word,
a
to
different
empower,
space.
because you want to give people the tools to be able to, get it done, do it correctly.
Exactly.
And then that shows, your power as well.
Exactly. And then the podcast itself allows us to unlayer. Because my biggest thing with coming up with a lie is I'm always about taking something negative and finding out the best space in it. Like
Right.
a lie is sometimes someone's interpretation of the truth. They just didn't have enough of the corrected information to deem it as the truth.
Right.
You know, so
right.
let's unpeel what this lie really is. And it's factoring around business, finance, and your life, because it's its own circle of
yeah.
life.
Oh,
You
yeah.
know, so I want to bring on, you know, small business owners, get their challenges. What keeps you up at night? Figure out, you know, what the best step is for you to figure out that. Let's unpeel that lie. Let's figure
Right.
out what the truth is for it, and then give you the tools
Right.
you need. And I'm pretty sure we all come across the same things.
Oh, yeah.
You know, so
Oh,
it's
yeah.
nothing that's new.
Most definitely.
Yeah.
So tell me, Yvonne, to you, what does it mean to discover your best self?
Discovering your best self is to recognize we all flow on energies. And you need to recognize how and who you need around you in order for you to really tackle the best you. Because unfortunately, we can't do anything without one another. You know, you can't tackle yourself. All you can do is be responsible for yourself.
Right.
But you can't tackle the real you
Right.
until you explore outside of you. Because a lot of times we are our worst enemy, and we are
Yeah.
the people who stop our own forces.
Oh, my God.
You know, so let's just try to figure out where we want to go, and then deal with the energy. Like, draw yourself to what really attracts you
Right.
as an individual, and then where you want to be in your business. So I say to this, everyone's a business person, whether you go to work 8 to 5 or whether you're an entrepreneur,
Right.
independent person. You all give a service, you get paid for it, and you have some incentives, and some of the incentives you have to make on your own. But we're all in business to make money, build wealth, and understand knowledge, because we all want to be up and at 'em and have money to leave for our children,
Yeah,
and
leave a legacy.
leave a legacy. And it's very important to do.
Yeah.
You know, but again, you've got to be ready to have the talks. We're just now having the talks. When you recognize people have been talking and doing the whole time.
Yeah.
You know, and, you know, understanding that just because it looks like doesn't mean that it is.
Right.
So you really need to address it
Right.
as
Right.
core. But, you know, taxes, like, again, it's something that we all have to do. That's why I call it a recession proof. So if you're interested in, you know, in learning more, you know, definitely educating yourself.
Yeah.
You know, address a tax class. You know, figure out all the new changes in the laws that are in place for you as an individual. And then if you feel like it's a space that, hey, I think I can do this myself.
Right.
Yeah.
Yeah. And so how can people learn more about your information, your business, and how you can help them?
Okay. Well, definitely, I'm on every panel. You can definitely reach us out on Twitter, Instagram, phone. We're only a phone call away. I actually service takeaway tax all year long. I know when people say taxes, they really only think about the first 3 to 4 months of the year, but no, we do taxes all year because we do plan and do advise. We do have an upcoming tax class for beginners, semi-pros, and experts, because we all need to continue to educate ourselves, even if we are tax preparers currently. We need to continue to educate ourselves on, you know, how we do the best opportunity we can give to our clients. You know, we're always should be in a learning space for that. Also, you can find me on Y Cobb Speaker. I have a radio podcast personality, and that's just bringing the forefront to a lot of my speaking engagements and educational platforms. And the live podcast will start this fall in October, which I hope to switch roles. And get you on, and we could.
Would most definitely
I
do
know,
that.
I want to discover how you started discovering yourself. You know, because this is a huge platform. You know, and I know that you're going to take good care of it. Again, you can find me again as Y Cobb Speaker, Yvonne Cobb. I'm on every social media outlet I can be on, but I'm as personable as a telephone call.
Yeah.
So people
And
can
she
reach
is,
out
guys.
to
I
me.
mean, when I first met you, I was like, you know, just your personality, your character, your business sense. And so, I definitely stand by any kind of business that you do. So, don't forget, guys, to make sure you hit her up on either IG or Facebook, email, any of those things.
Any of those things,
yes.
guys. Any of those.
And then say it again. What's your handle on IG?
IG is White Cobb Speaker or Takeaway Tax is where you can reach out to me. I'm there at either one of those.
Okay. And listen, like again, guys, this is we are talking about generational wealth,
yes,
and how taxes can help you get on that track.
Absolutely.
And then the first one we talked about we talked about our network,
yes,
and our social capital,
yes,
and then we talked about credit. And now we have Yvonne here with taxes, and then we were talking about real estate. So you know what? You don't want to miss out on this series. She's the third one in this series.
Third one.
Yep, and you're actually the sixth episode.
The sixth?
Yes, the sixth episode.
Discover yourself is doing it.
Yes. So thank you so much for tuning in to Discover Your Best Self.
Yes.
And I cannot wait for us to go ahead and put this out.
Yes. Thanks, guys.
Thank you.
I appreciate it.